All right, everybody. We are back, and we just took a quiz, okay? Now, I want for you folks at home, the quiz is up on the screen for you to look at, okay? Now, if even though you didn't know that there was going to be a quiz, what you might want to do is just pause it and go ahead and take the quiz as if you were taking it at home, okay? And then however long it takes you, just push play when you are ready to go over it, okay? But I wanted to do this. I know we're kind of in the middle of chapter 6 right now, but I don't want you to forget chapter 5, okay? So let's go ahead and go through the answers on this, okay? Like I said, for you folks at home, if you're not done, I wouldn't expect you to be in 30 seconds, but just pause and then come back to us when you are, okay? All right. Hopkins Company purchased merchandise from Schuyler with an invoice price of $40,000 and credit terms of $215, net $45. The merchandise had cost Schuyler an amount of $28,000. Hopkins Company paid within the discount period. Assume that both the buyer and seller use the perpetual inventory system. Okay. They want us to do journal entries for both the buyer and the seller, correct? Okay, let's do that. First of all, who is the buyer? Who is the buyer? Hopkins. Okay. Now, when they buy the inventory, what we're going to debit is merchandise inventory. Let me back that up a little bit. Merchandise inventory, and we credit accounts payable for $40,000. Okay? Does that look right? Now, when they pay their cash, when they pay that liability off, do they pay within the discount period? Yes, they do. Okay? So they don't have to give cash of $40,000, do they? They only have to pay cash of $39,200. Okay? That's a 9. $39,200. Now the entire accounts payable goes away. Where does that extra $800 on the credit side, journal entry has to balance, where does that go to? No, it goes to merchandise inventory. Don't think sales allowance or sales discount because we're on the purchase side, right? We're on the purchase side. Make sense? Okay, so those are the journal entries for the buyer or the purchase side, okay? Now let's make them on the seller side, okay? Who is the seller? Let's see, it's Schuyler. Okay. When the initial transaction occurred, the journal entry was, there actually was 2 journal entries, wasn't there? There was an accounts receivable and a sales that were debited and credited for $40,000. Okay? But there was also a journal entry that day where you had to increase your cost of goods sold and immediately decrease your merchandise inventory for the cost of those items, which in this case was $28,000. Okay? So there's 2 journal entries that you had to make, correct? Now, we know that Hopkins paid within the discount period, right? As a matter of fact, they sent a check up here for $39,200 to Schuyler, correct? So, when Schuyler opened up their mail, how much cash do you think was in that envelope? $39,200. Okay? So the journal entry for Skylar, on the day they received the cash, they received that cash of $39,200. The entire accounts receivable went away, correct? Because we're not getting any more. The client has taken care of that, or the customer. Where does that extra $800 go to? Does it go to merchandise inventory? No. It goes to, doesn't go to merchandise inventory, it goes to sales discounts. Okay? Now again, this is a very easy process to watch somebody do it and go, this makes all the sense in the world. But then on a test, everybody gets these accounts and numbers all mixed up. And I could hear some of you guys telling me the wrong accounts to debit and credit, okay? Because you got to remember, am I on the purchase side or am I on the sales side? If you're on the purchase side, only use those purchase accounts. If you're on the sales side, only use the sales accounts. Make sense? Okay? So I hope everybody did real well on that quiz and it was an enjoyable experience for you. Okay? The reason I do these, you know why I give quizzes? You know why I give quizzes, guys? Well, first of all, because I love you and I want what's best for all of you. Okay? But more importantly, actually not more importantly, just as importantly, a lot of students, it takes a quiz or a test situation to alert them that I don't know this as well as I thought I did. Okay? Now, I would rather that happen on a quiz as opposed to a test. Does this make sense? Because a lot of times if I don't give quizzes, I found that students finally figure out when they take the test, I don't know this information. Okay? And I'd rather it happen on a quiz so that you can have some time between now and when we take the test, which is coming up soon. And you can learn this stuff really good. Okay? Don't ever just look at it being done and get a false sense of security. Oh, that you know how things are going, okay? All right. What I want to do now is go over the homework that I assigned, unless there's any questions on the quiz. Any questions? Okay. All right. Let's take a look here at the homework. Okay? Okay, one thing I wanted to point out, and I'm gonna before we go over the homework, I want to go back over to the very first one we did, which I believe was it SpongeBob? Believe so. Okay. Let's look at SpongeBob. Okay. All right, let's take a look on that on the screen. Okay. One little hint I want to give you here is, now this doesn't always work for every type of inventory, what I'm about to show you. Okay. But in this sort of situation where I ask for you to do the transactions for a period of time and then to give me the total cost of goods sold for the period and then the ending inventory at the end of the period. That's when this works. Okay? What does 103 plus 81 equal? If I add those together. It equals 184. What does 117 plus 67 equal if I add them together? 184. Okay, that's not by coincidence. That's not by coincidence. Okay? The reason that happens, if you care, goes back to that original equation that we learned that said beginning inventory plus purchases equals merchandise available for sale. Okay? Well, it either becomes ending inventory or it becomes cost of goods sold. But either way you divide those up, they're going to add up to the same number. So on SpongeBob, when these added up to 184, That's actually the merchandise available for sale number, 184, okay, for that period. Make sense? So when I ask those in this manner, like on the test, that is a really, really good way to check to see if you got the right answers. Now, it's not a guarantee that you got the right answers if they add up, but if they don't equal the same number, it's a guarantee that at least one of them's wrong, okay? Now, knowing that information, go over to New Technique, and let's take a look at the answers, okay? All right. Let me give the answers on that. Hey, Zach, do me a favor, okay? I want you to test that little method we just learned and see if those numbers each add up to the same number, okay? Did you get those numbers? Okay. What he's doing is adding the ending inventory to the cost of goods sold for each of those methods. The first one was FIFO, the second one was LIFO, and this was weighted average. Okay? They all add up, don't they? Okay? See, that's a great way to check things, right? Did you use that to check it in your homework? Probably not, because I hadn't taught it to you yet, right? But you will from here on out, right? Okay? Great way to check your answers. Okay, so those are the answers that go in the blank. As a reminder, on the test, what I'm going to do, if this were a test question, I'm going to look to see if you have the right number in the blank. Okay? If you do, you're going to get the points for that amount of blank. Okay? Probably 2 or 3 points. And if you don't, you're not. Okay? But I'm not going to go through all your detail if you got the answer wrong and try to figure out where you went astray. Okay? So students say, do you care if I fill out these inventory sheets? I really don't. I mean, I still have to do them. You know, it's been 20 years since I learned this stuff, and I still have to do them. But if you don't want to fill out those inventory sheets, I'm not going to look to see if you filled them out. Okay? What I'm going to be looking for on the test is to see if you have the right numbers in the blanks. And short of looking at somebody else's sheet, I don't care how you come up with those numbers. Okay? And that'd be a bad idea anyway in the test situation in this class because you all have different versions of the test, right? Okay? So, I'm not going to look through all your inventory detail. That's just too difficult to be consistent, and it just doesn't work. Okay? Now, I believe everybody has the details for how we arrived at those numbers, right? Let's take a look at that real quick. It's very hard to look at on the screen. So that is why, whether you are here face-to-face or whether you are at home, you have this detail. Okay? You have this detail. All right? Did you get one of these answers, Lauren? You were here? Okay. Okay, that's the answer to the FIFO. I'm happy to entertain any questions, but there is how I came up with these numbers. Let me encourage you, too. Everybody here in the actual face-to-face class, as well as you folks at home, and keep it, please, on the screen, not on me. If you're having trouble with these, don't forget that we have free tutoring here. We have a free accounting tutoring center here on JCCC campus. Okay? Now, I believe everybody here in class, I gave you a bookmark with the hours, right? Okay? And for you folks at home, I've sent you an email as far as the hours of the Accounting Tutoring Center. That's free. You don't need to make an appointment. You can come and go as you like. Okay? But if you're having trouble with this sort of stuff, please go in and work with the tutor or make an appointment with me and we can work some office hours out. Okay? Now this is the answer to FIFO right here that's on the screen. Let me show you the answers to LIFO. Okay. Take a look at that. The numbers highlighted at the bottom are obviously the numbers that go in the blank. This is all for new technique. Okay. Are these numbers checking out? Okay. And then for weighted average. Okay. This is for weighted average down here for new technique. Now we only have to figure out the weighted average cost right before we make a sale, correct? You don't need to figure it out every time you make a purchase, just when you make a sale. Okay? Remember, don't round it to the nearest dollar. Take it to 2 decimal places after the decimal, or 2 numbers past the decimal place. Okay? So this 1735 here, don't round that to 17 or don't round it to 17.4. Take it to 17.35. Okay? All right, any questions on new technique? I believe, go ahead and keep it up on the screen a little longer. They don't need to see me. But I believe we've gone through all the homework that was in that inventory handout, haven't we? Yeah. Okay. We still need to go through, I believe, Quick Study 6.3. Yeah. And we'll go through that in a minute. Okay. All right. Questions on anything in the handout? Okay, if not, let's go ahead and take a look at Quick Study 6.3. Okay, I'm not going to read through all that detail, but once again I wanted to point out, and I said this at the end of class, looking at Quick Study 6.3 in your book, that sentence in yellow, do you remember me saying you only use that sentence in yellow for specific ID method? When you do the other 3 methods, I want you to totally ignore that sentence. Okay? In semesters when I didn't tell my students that, they were majorly confused. And I can understand why. Okay? So, let's take a look at these answers. I'm not going to read through that detail. You have it in your book. Okay? All right, let's take a look at FIFO for Quick Study 6.3, first of all. And I want you to check your answers. Make sure you got the right numbers. I'm happy to answer questions, but I think at this point, hopefully you're getting it. Okay? And this is for FIFO. Okay, any questions on that? If not, let's look at LIFO, which is right below it. Okay. All right. Any questions on FIFO or LIFO for Quick Study 6.3? Okay, well then let's take a look at weighted average. Now I really wish they would have not done what they did, but by golly they did it. They had one that had a weird rounding thing, didn't they? Why'd they do that? All the numbers they could have picked. So yours might be off a little bit. okay, if you rounded differently. But listen to me carefully. On the test, I'm not going to give you any rounding things that go to 3 decimal places. I'm not going to. So if you get one, then you've probably made a mistake. There's a little hint for you. But I'm not going to make you make decisions in regards to rounding. Okay? I want everybody to have the same right answer. Okay? But this one does have a rounding situation. Some of you probably rounded that to $9.67. If you did that, that's fine. If you kept it to 9.667, that's fine. It's probably one of those 9.666666 ones, isn't it? Okay? Poor choice of numbers. Okay? All right. And then we talked, come off the screen for a second. We talked at the very end of last hour about the specific identification method. The specific identification method is one where you specifically know, there's no assumptions that need to be made. When somebody purchases 4 items or whatever, you know exactly the specific cost for each one of those 4 items that they purchased. Okay? Do you know what type of company might typically use the specific ID method? You're right. You're exactly right, Spencer. Those who sell really expensive things. For instance, like an auto dealership or a jeweler. When they sell things, they're not just like, wait, what's the average cost of a car on the lot? Or what's the average cost of a diamond? No. When somebody comes in, if they buy 3 diamonds, they know exactly the cost of those three diamonds. There's no guessing. There's no assumptions that need to be made. Okay? Does that make sense? Lauren.
Why don't all companies do that regardless of how expensive their stuff is? Because wouldn't overall it would save them a lot of money? Like if they're...
Why don't all companies use the specific ID method?
Is it like way more complicated and drawn out?
Well, here's what I would say about that. First of all, 30 years ago, it would have been impossible. I mean, go back 30 years to a grocery store and you buy, 6 2-liters of Diet Coke, okay? Well, it's like, how much did we pay for this Diet Coke? How much did we pay for this one? How much did we pay for this? How much did we pay? I mean, can you imagine 30 years ago trying to do that in a little grocery store? It'd be impossible. Now you could technically do it because of what? Of technology and the barcodes and all that sort of stuff. And there may be some, I would say this, there probably are more companies using the specific ID this in 2009 than there were 20 years ago, even 10 years ago. However, it's still, I don't really know how much benefit there would be to doing that. I mean, it would really make your costs all varied depending on which item that the person happened to select. Does that make sense? So I don't think you're going to find a lot of companies that use the specific ID, just because I just don't think that they're going to go to that trouble. Okay, because it's actually a little bit more complicated of a way. Okay, because I mean, think of this. Think of if you have your inventory of items for a specific item, like 2 liters of pop, and you want to know what your inventory is at the end of a period. You could literally have 30 different costs for that Diet Coke 2 liter. You know what I'm saying? Just depending on the order people picked them up in, as opposed to doing it by layer. Do you kind of see on FIFO and LIFO, where, and even weighted average, where we kind of group them into layers? You know what I'm saying? Do you remember when we figured out the average age of the person in this classroom? And I had all those green panels with your individual ages written on them. What was the first thing I do? Did you remember? I grouped them all together. I put all the 19s there. I put the 18s there, and so on. Because it's easier to comprehend. It's certainly kinder to the eye, as opposed to just having a bunch of numbers spewed about. Okay?
I think weighted is the easiest.
Okay.
There's less transactions going on.
Well, and some people say, oh, this seems like the best method, or this seems like the best method, or why do we use LIFO? That's weird. Okay? That's a great segue right into now what we're going to talk about here in a minute. But before we do that, are there any questions on, oh, we need to go through the answers to specific ID, don't we?
Yes, we do.
That's what we need to do. So, now that we've talked about specific ID, that's when you want to concentrate on that yellow sentence they gave you in the book. And the answers are, well, what they say here is, let's see how they worded this. I think we need to explore this a little bit. What are they at? They are asking us for the ending inventory amount. Is that correct? Is that right? So is this 297, does that equal ending inventory? Yes? So let's be specific. That equals ending inventory. Okay? Well, how would you get cost of goods sold? It didn't ask for it, but how would you get it?
7 items, units sold at 9 and 11 units sold at 10 equals 173.
Okay. You could go through and just look in the yellow to see what they said we sold. Or if you wanted, isn't this one of those problems where you can add up these two numbers and they should equal the same number? Peter, what does 296 plus 174 equal?
470.
470? Exactly. Well, what's 470 minus 297? What is it?
103.
470 minus 297? You guys
Yeah,
got
173.
calculators. It's
173.
too early. What is it?
173.
173, isn't it? Okay. So it doesn't ask for it, but 173 would be the cost of goods sold. Again, that plus that equals 470. That plus that equals 470. In each one of those examples, the cost of goods sold for the period plus the ending inventory equals 470. It's a great way to check your work. Make sense? All right, good job. Now we've gone through all the homework, haven't we? Okey-doke. Let's switch over to your PowerPoints. I want to take a look at a specific slide here. I want to look at the slide that looks like, where did she go? This one right here. Okay? So, take a second to look through your Chapter 6 PowerPoints and find this slide. Okay? Go ahead and just keep it on this slide while we're having this talk, please. Now, this is a company, and what they did is they figured out what their income statement would look like and what their, at the very bottom, what their inventory amount would equal if they would have used the specific ID method, or if they would have used the FIFO method, or if they would have used the LIFO method, or if they would have used the weighted average method. Okay? Now, I will tell you, this little slide has to do with the transactions and the analysis that took place on all the PowerPoint slides before that. Okay? Now, I didn't go over those in class because I think I found it easier to teach this using the method that I do with those little yellow blocks and stuff. But if you want some more examples, you can look through those extra PowerPoints that you all had. Okay? But I say all this because if you look back at the transaction analysis that occurred in these PowerPoint slides, you are going to see that prices over time it's hard to write with a mouse. That prices over time, well, let me ask you this. Over time, generally speaking, do prices go up or down? Generally speaking, there is inflation and prices go up. And that is the case for this example. Prices over time went up. What do I mean by that? That means that as they bought this inventory, their most recent purchases of that inventory were more expensive than the previous one. Okay? Now, looking at this, it makes a big difference on which method this company chooses, does it not? Because in each one of these, the cost of goods sold is different, thus the net income is different, and the balance sheet inventory is different, depending on what method they choose, correct? Now, can you see from looking at this slide why a company might want to use the LIFO method? Why might a company want to choose the LIFO method?
Cheaper.
Because it boosts their books.
Huh?
Aren't they allowed to like recognize revenue earlier or something like that?
Well, take a look at the income tax line. Why would somebody want to use the LIFO method? Do you guys like to pay taxes? Which one of these methods does the company pay the least amount of income tax expense? LIFO. So listen to me. This is very important. Generally speaking, prices go up over time. When prices do increase over time, i.e. an inflationary environment, LIFO method will result in the lowest income tax paid. Let me say that again. Let's go ahead and look at the screen again. Over time, for most companies, prices go up. When prices do go up, when it's an inflationary situation, LIFO will result in the lowest income tax expense. People don't like to pay taxes. LIFO only makes you pay, if you use LIFO, you only have to pay $261. Now, it should make sense that the highest tax amount is FIFO, which is the exact opposite of LIFO, correct? And it should make sense that the numbers for weighted average are right in between FIFO and LIFO, shouldn't it? Weighted average kind of smooths things out, okay? Kind of smooths things out. You with me? So, now this is only if prices are increasing, but we know that's generally the case. But it's important for you to know why companies might want to use LIFO, because it results in the lowest income tax expense. But it certainly makes a difference, their income statement and their balance sheet, doesn't it, in regards to which method they choose? Okay? Now let's keep talking about that a little bit. We talked about some of the advantages of the LIFO method in the sense that it results in lower income tax when prices are increasing. But here are some other advantages of the methods. As I said, the weighted average kind of smooths out price changes. And the first in, first out, okay, first in, first out, last in, still here. Well, that would make sense that the ending inventory approximates current replacement cost, because the last in is still here in ending inventory, and the last here is probably a lot closer to what the replacement cost is than anything, right? The last price you paid is still here in ending inventory. Thus, ending inventory approximates current replacement cost. Okay? What about LIFO? An advantage of LIFO is it better matches current costs and cost of goods sold with revenues. Okay? Well, last in, first out. Last in, the most recent costs are first out the door through the cost of goods sold, correct? So that's what this is talking about, is the advantages of the methods, okay? Now, do not forget something very, very important that I said last period, and that was this. Yes, you have to choose an inventory method, FIFO, LIFO, weighted average, or specific ID. But the true manner in real life in which your inventory moves doesn't need to match exactly the method that you chose for accounting. Remember that? That would be pretty impossible anyway. Why? Because look at weighted average. What if you choose weighted average? Can things move in a weighted average way? No, they can't. That weighted average cost, a lot of times there was no item that cost that much. So in reality, your items don't have to move in the method that you choose. Okay? Let's go on. Now this little slide says what we said earlier, that if you use LIFO for tax purposes, oh, no, let's wait on that. Let's back up here. It's saying something different. What this is saying is that the IRS identifies acceptable methods for inventory costing. Now, I don't want to further complicate things, but I want to say this. The method that you choose for your books may be different than the method you choose for your taxes. That seems illegal, but it's not. You could use weighted average for your books and FIFO for your taxes, or vice versa. Okay? The only exception is this, and that's what this little yellow box on the slide is saying. If you use LIFO for tax purposes, then you have to use it in your financial statements as well. If you use LIFO for tax, then you've got to use LIFO for your financial statements. Does that make sense? Okay, now that being said, some people say, well, couldn't you just keep switching methods from period to period, depending on if prices are going up and down? No, and that's because of the consistency principle in accounting. Okay? The consistency principle pretty much states, well, let me back up. Generally accepted accounting principles and the powers that be do not want you to try to trick the readers of your financial statements by just choosing different methods and, trying to play a shell game with them. Consistency principle states that once you choose a method, you need to use that method. Now, that's not to say that you can never change methods. But what it is saying is you can't keep switching methods. And as a matter of fact, you may be required in some situations, if you switch accounting methods, let's say you go from FIFO to LIFO, that you might have to restate last year's numbers, and nobody likes to do that. They don't want ways that you can fool the readers of your financial statements. Does this make sense? Okay, I only have one homework for you, but this would be a good time to start studying for the test. But what I want you to do for homework is quick study 6-4. Quick study 6-4. Okay? All right, I will see you guys next time. We'll see you.